Hello everyone, welcome back for another Friday Fratarcangeli market update. Here we are closing down Q2 earnings. We have another week left with retail and Nvidia next Wednesday. We're sitting here looking at a number of concerns leading into the midterm elections. And we're just navigating the typical election year and the second year of a first-term presidency. And furthermore, we're monitoring all the data that's coming down the pipe as we lead into November. And of course, we have the Iran issue and the Hormuz Strait that we're navigating as well. So a lot of things to talk about. Let's start with the fact that the Treasury came out and started buying the long-term treasuries to contain long-term interest rates, sort of doing some of the work of the Fed. We'll see how Bessett's guidance on that plays out. But the market seemed to have reacted fairly well to it. And here we are this Friday with the market taking off here as well with a very tough day yesterday, a lot of volatility. So we're watching that very closely. We also have the unemployment numbers or the employment numbers coming out. We're seeing a lot of job opportunities in manufacturing and construction, that infrastructure for AI. But we're also seeing some reduction in jobs with our government and as well the category of teachers. So we're seeing some readjusting of policy and the effects that it's having on unemployment, but generally very strong. We're going to be watching very closely with retail sales that were on upon us here this week, as well as going into next week, seeing how the consumer can adhere to the inflationary cost and pressures and the higher cost at the pump. Can they still continue to make ends meet? So far, so good on that front, but we're watching closely. In addition to that, let's not forget, we have a midterm election that's around 70 days away. And historically, what we've seen in that month of August, September, and October leading up to the election is we have continued heightened volatility. Let's not forget, we had a 9% decline in the market as of March of this year. So we were down and we recovered very nicely up over 20% from our lows, with the markets now sitting slightly above 10% for the year. So we have the wild swings that we've been navigating, dollar cost averaging and staying the course with our long-term investments. I wouldn't be too surprised as the market is a little bit high here relative to meeting new highs this year, that we get a little bit of a consolidation and more volatility leading into the election. I believe this is healthy. I believe it'll ultimately lead to what has historically happened after the midterms, which is the fact that 90% of the time the market is up, and it's up on an average 19% for 9 months after that midterm election date comes and goes. And as we look at the earnings, we've had 20% earnings growth year over year. We're seeing very strong beats on the bottom line of earnings at 80% of the companies that have reported. So we have a lot of catalysts behind why this market has legs. And let's not forget the continuation of this technological expansion called AI that I believe, having lived through the dot-com timeframe, the internet, the pandemic, all of the different iterations that Fratarcangeli Wealth Management has been around for over 30 years. We have the experience, we have the factors that would allow us to guide and counsel our clients through these types of mazes. And I believe, frankly, the best is yet to come relative to these markets in the secular bull market. So a lot going on. We're going to be watching very closely. Next Wednesday, Nvidia reports earnings, which we'll be watching very closely, and how that affects the semiconductor trade, which has been a little bit tame recently. We have the consumer consumption, the PCE numbers coming in Wednesday. That's going to be an indicator of inflation. So we're watching very closely. We see these volatile times as opportunity, and we have the experience and the capabilities to help you guide and counsel you through these coming months and get prepared for that next expansion that we think is on the horizon. Appreciate all your time. Look forward to seeing you all soon. Bye for now.